welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of July 28th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, we've been on a roller coaster ride here with Maryland mortgage rates. They've been going up and down over the last couple of weeks, but the good news is that up and down has been contained to about a difference of 0.25%. If you take a look at the bond chart, you can see that roller coaster ride. Bonds were going up, going back down, going back up. Now we're right at the bottom of the hill. We just came down, but if you look there on Friday, green candle on Friday. So that's good news. We're at the bottom of the hill, and with that green candle, it's a good technical sign that the roller coaster is getting ready to go back up the hill. So with that in mind, we're going to recommend floating your Maryland mortgage rate to start the week and see if the bonds can improve from here and move Maryland mortgage rates lower. But if we break below this level of support that we've been holding for the last 3 or 4 weeks, that would be a bad sign. Mortgage bonds would definitely sell off and you'd see rates move higher and we'd quickly switch to a locking stance. And that could happen this week with the unknown jobs report we're going to get into a little bit later. So if we look at the economic news this week, in economic news Thursday, release of weekly initial jobless claims. It was a very good report. And that's a very good news for the labor market. Jobless claims dropped 19,000 claims to 284,000 claims. That is an 8-year low for initial jobless claims. So jobless claims are a leading indicator for the job market, so they're showing what's coming for the job market. So that's going to be interesting to see what happens with the jobs report this Friday. That report could move mortgage rates higher if it's a very good report, piggybacking off of this jobless claims. But we'll have to wait and see what happens there. Now, in inflation news, we saw the Consumer Price Index, which is the CPI, come out last week for June 2014. That was a good report for mortgages, showed inflation remains tame on the consumer level. It actually dropped 2% to 1.9% for the core, so that was a very good reading there. But Producer Price Index, the PPI, that's a measure of inflation at the wholesale level, that did come in a little bit hot. So we're going to have to keep a watch for that to see if that spills over to consumer inflation level. Now, housing news. Very good report last week. Existing home sales for June 2014 were up 2.6% to 5.04 million units. This was the first time in 9 months we had existing home sales break the 5 million mark. So that's a good sign there, and that was better than expectations. But we had a bad report. The new home sales for 2014 also came out last week. And unexpectedly declined by 8.1% from May, down to 406,000 units went under contract. We were expecting 475,000 units for new home sales, so very disappointing report. But it's not terrible. Don't get too crazy, because if you look 2 months ago, we were at 408,000 units sold for new homes anyway. So it's not like it was disappointing, but not terrible. And if you notice, existing home sales make up most of the market at 5 million units compared to 406,000 units. So the housing market overall still doing very well. We just had a bad report on new construction with the new home sales. Disappointing, not bad. Now, big news here. USDA Rural Housing Loan Update. For the Delaware, Maryland region, when you go get a USDA guaranteed loan, you go to a bank, apply for the loan. That bank underwrites your loan, and once they clear you, they then, instead of normally closing a loan like any other loan type, they have to send it to Rural Development to underwrite and sign off. That's for any bank. USDA Rural Development is at 30 business days to review a loan. This is very important for you to know. What that means is, if they're at 30 business days and your lender has to underwrite it and clear it first, you're going to need a minimum of 60 days when you write a contract for a USDA loan to close on time. But if your lender or your bank can't get you cleared in less than 30 days, you're going to need even longer, 75, maybe 90 days. So the moral of the story, it's going to be very, very important that your bank or your lender can get you cleared in less than 30 days, or you're going to need to make sure you're writing a contract for 75 to 90 days. So this is important for borrowers, agents, title companies. Everyone needs to know this. So when they get a contract on a USDA loan closing in 30, 45 days, right away you need an addendum. That's not happening. It's impossible, because 30 business days is more than 30 days. It's closer to 45 days. And in Rural Development, the state director reiterated that July 18th. We're at 30 business days. We're not going to change that in the next couple months. It's going to be at 30 business days, so plan accordingly. And do not ask for an update until the 30 business days is passed. They're going to ignore you. So the lender can't do anything, can't call anybody, can't push it. That's just where we're at. So you've got to plan accordingly, because the USDA loan program is a great program, 100% financing. So if you're taking advantage of that in an eligible area, you got to understand the turn times for writing a contract. Now, in the local news, the next free first-time homebuyer seminar is coming up in Frederick, Maryland on Saturday, August 9th. That's at the Holiday Inn Conference Center right there in Frederick, Maryland from 10 a.m. to noon. That's a Saturday. And then the next one in Towson, Maryland is Saturday, August 30th from 10 a.m. to noon at the Sheraton Baltimore North Hotel right there on Delaney Road. Now, you can register for either one of those events by giving us a call at 410-412-3319, or you can register online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.